So our stock picks of the year. So the first one for me, obviously we're going to do another one next week as well. So the first one for me is actually Snapchat. Now it's a bit of a crazy suggestion considering last year I had SMH, which is the ETF. So I've really dumbed it down a bit, and obviously this is Snapchat. It's not an app I use, and it's not an app my generation really uses, if I'm completely honest with you. But I've heard some very good things around the actual company and how it's kind of fundamentally changing. And you can see with my key points at the top there, you can see there's obviously 500 million buybacks. We have user and revenue growth. I was going to put the charts on here in terms of like visually, but it's just going to be too much to look at. So maybe I'll do a separate post on my X channel for that. You can see partnership with Perplexity AI as well. I think that's worth a lot of money. It's going to be integrated into the app, obviously voice recognition, all that kind of stuff as well. New subscription model. I think they've made it slightly cheaper, more accessible. I think they've added a slightly cheaper version, so that's good for revenue. Of course, it makes a lot of sense. Snap OS 2.0, so they're obviously increasing their innovation skills, and of course the last point, which is probably the most important one, which is focus on AI powered performance advertising, which I'm sure a lot of companies are doing, which makes a lot of sense. But with this particular company, I think with the masses it kind of introduced itself to, I think that's key, especially with the younger generation. And lastly, I got this comment basically off of Google AI earlier, so I didn't write it myself. But in essence, 2026 marks Snapchat's push towards moving beyond the smartphone, making AI and AR a natural integrated part of daily life through their hardware, specs and software, blah blah blah. One of the other things as well, I don't know why I haven't put it on here, but they're trying to introduce their glasses, the AR glasses, which they have done. They don't look very nice, so hopefully they're going to improve that and make them a bit more accessible. But it's a bit like the Apple Vision Pro, but smaller and obviously more trendy, in my opinion. But yeah, that's the kind of fundamental side, the logical side of the company. And now we're going to turn to the chart. This is obviously a weekly chart you can see on the screen here. We've got a couple of zones. We've got the blue zone down the bottom, another blue zone at the top, which, where's my cursor? Let's get the cursor out. So I'm talking about these boxes here. That's the bottom one, and of course the top one here. So very, very simply, this is obviously a supply zone. Looking for a bit of buying action here. We have had it in the past, but it's kind of simply kind of dribbled out over the last couple of months, really. But if we just get a break above this trend line here, perhaps with some news around the kind of next earnings call, or maybe even the one after that, potentially. Just a little bit of news around the company, obviously fundamentally pushing forward, especially with those buybacks. I understand I'm talking a lot, but you kind of have to. But the buybacks, I think, is very, very important to kind of reduce those shares. But you can see if we can just get through the trend line, I think that would really encourage price action to the upside. I think, firstly, I want to see this 1150 range kind of touched. I wouldn't be surprised if it came down from there and kind of retested some of these lower levels, about $10 or so. But ultimately, I want to make it a push towards kind of what's that, 1550. Obviously, 100% in a year is very audacious, but it can happen. I'm not saying it's going to finish at 1550. I'm not saying it's even going to get anywhere near 1550, but that's the chart that I've got presented in front of me. That's where I see it potentially going. Not if it's not this year, then obviously years beyond that, if they can follow up with the kind of growth and kind of anticipation that they've had in the last couple of quarters at least. So yes, there's lots of good things going for the company. In terms of downside, of course, if we do break these lows of around, I think it's around $7, that would be quite bad, of course, but that's why we have stop losses in trading. So for me personally, me and Kaye have spoken about asymmetrical bets a lot in our time. So if I was to place a trade here, I've been in the stock for a couple of weeks now, kind of accumulating, a couple of months actually, kind of accumulating on these kind of lows, waiting for a break to the upside. But if you have a stop loss kind of even at 650, that's not the end of the world, considering there's a potential 100% on the table. So these are the things you've got to look out for. Obviously, it's not a massive part of my portfolio. It's a small part of my portfolio. That's what it should be with a stock of this this kind of volatile range. But yeah, I think I've spoken enough on this stock. I think it's been a few minutes now. I've just kind of waffled a little bit. But what are your thoughts on this one, on this K? But we have brought it up a few times in the last few weeks.
Yeah.
Yeah, what are your thoughts on Snapchat for the year ahead?
So before I share my thoughts, I think one of the things I want to also share with the audience is that we deliberately did not pick the winners, right? I mean, we know for a fact that Nvidia is going to make good profits. We know Meta is going to make good profits. So we deliberately did not choose those picks. And we are looking at asymmetrical options, right? So places where you can actually get an outsized gain compared to where they are. And some of those names are always, in the dumps. You will not find a stock which is already $50 and then everybody's already behind that stock, and then you go ahead and pick that stock, because generally you have to go against the grain to really look at asymmetrical bets. So with that rant out of the way, I really think that I'm going to put this on my watch list. I might not trade it actively, but I think for me personally, if we do see a breakout, it's a very good leap option here, because I'm not here to make
Yeah.
a big investment into it. I'm not a big fan of Snapchat either, or I'm just not into this whole social media sphere. But considering if the narrative of AI is moving away from, let's say, not moving, but graduating to the next level where these softwares are going to get benefit of AI, I think Snapchat could benefit as well. Um, and if the stock is already trading at $7 and maybe drops to $6 or something like that, I mean, those are absolute lows. I mean, yes, the company could go bankrupt, could go to zero, but it has still survived over this long. So there is definitely things happening. There are catalysts behind it, and for a $6, $7 stock to go to 12 or $15, it's still doable. And if you actually use options here, you will be able to leverage it. You'll be able to use less money to buy
Mm.
100 stocks with one contract, and your leverage will be much higher. And you can get a 2028 January leap option, which gives you 2 years time frame for this thesis to play out. Or if you go the commons route, which is also an option here, which generally I know you will focus on the commons here, i, I like it, and I'm going to put it on my watch list here, because these are some of the asymmetrical bets. You don't have to size this to the biggest portfolio position you have. A small bet, why not?
Yeah, I like your point there on the leaps options for sure. It's on my leaps watch list, so yeah, it's definitely on there. But for now, I have shares, of course. But yeah, looking into leaps, I think would be the best, not the best, but one of the best ways of looking into this as an investment for sure. I was going to say something else, but I can't remember what it was now. That's a bit annoying, off the top of my head there. But I think we've covered Snapchat quite well there. If you've got any comments, obviously leave them in the comment section around Snapchat, whether you think the same or not, of course. But yeah, no, fantastic. That's my pick for this or next year. And we're going to have another pick as well for 2026, but we're going to include that into next week's session. So if you like this kind of coverage for the pick of 2026, then be sure to come back next week at 1 p.m. Eastern Time on various platforms. But now we're going to look at Kaye's 2026 pick, which what is it, Kay?
It's Rivian. So
Hey,
if you've been following me on X, you probably, it won't come as a surprise. And so just a background on Rivian is, I wasn't into Rivian, I'll be very honest, until the first quarter of this year. And I know Shaun has been into the EV space for much longer than me. He has traded Rivian many times. He is into Neo and all the other sorts. I have invested in Tesla. I'm a constant investor. It's one of the best wheel strategy sticker out there. But as I started to get into Rivian and started to kind of learn a little bit more about the CEO, and for me personally, I think understanding the CEO mindset is more important than to just go with the hype. So over the years, or over the couple months, what I have realized that a founder led company generally has a better shot at achieving the vision, and that you can see it in Tesla as well. And now there are Tesla naysayers that they don't think that Rivian is gonna do as well as Tesla. But let's keep that aside. The thesis for 2026 is very simple. They just had an autonomy day, which kind of proved that they are on the right path of going the way how Tesla has went on the FSD, with the addition of additional technologies like radar and lidar. I'm not an expert in radar lidar technology, so I'm not going to get on this argument on whether it is good or not, and we should go vision only. There are many things Elon Musk has promised, and he still hasn't delivered. So that to say doesn't that doesn't say that these guys won't succeed. And Waymo has still showed everybody that, hey, with lidar and radar, you can still run the business. Anyways, The second is what we are seeing is that we have seen Rivian stock after the big pop up throughout the IPO, and when we saw this decline, we have been forming this very long base. The stock has been trading in these low levels for multi years now. So this is a very ideal candidate, ripe candidate for a breakout, and that's exactly what we are starting to see now. The next big catalyst is the R2 launch. So the first half of 2026 will see their mass market vehicle launch, which will be the R2. So for those folks who are not very familiar with what R2 is going to be a $45,000 mid-size SUV, which is one of the most popular categories of cars that we see in the market or on the roads, and Model Y is one of them. So now basically the way they are positioning, they are not positioning Rivian as a Tesla killer, they are positioning Rivian as an option, so that in ICE versions you have many options when you're looking at a RAV4, a Mazda CX-9, or many other options. Similarly, in electric vehicles there is no other option except Model Y. Thirdly, we have the gross margins improving. Yes, the net margins are still in loss, they are still losing money. But what you want to see and what the investors want to see at Wall Street is, are they trending in the right direction? And as of right now, they are trending in the right direction. And that's what matters. Also, we had this influx of $6 billion from Volkswagen. No company is going to invest money blindly into this. Same thing with Amazon. The tie up with Amazon, with all the new delivery, all the new demand for the electric trucks, that's still piling up. So you can see the capital coming in and the validation coming in from Amazon. And I still think, could Amazon down the road acquire Rivian? Seems unlikely, but it could be a possibility. But again, that's just speculation. And third and fifth, we already talked about the autonomy. So for me personally, on the technical side, it's not going to go from $20 to $100. I'm not that crazy, but there are levels we should be watching. The first level is $25, which is the price target for most analysts. And take price targets with a grain of salt, because these analysts, they change price targets on the whim. Once the stock has already run up, they'll make the price target change. So take it what it is worth. The next target will be the $30, and basically these are all your previous highs, which we'll consider as resistance, and then it will be 40. So these are the different levels that we will target throughout the year to see if the thesis continues to stick in place or not. And that's pretty much it from my side on Rivian.
Yeah, I think that's a really good presentation you just brought to the table there with Vivian. Really good thesis points. Excuse me. And you touched on the technicals there, which I think is important. Obviously, the recent breakout and the trend line, it can only really go well from here, in terms of breakout point of view. Obviously, we will get a pullback at some point. This is how stocks work. I think one of the thesis points I wanted to touch on personally was the customer kind of feedback that they've had since inception. Really, it's always been really, really positive, obviously, with the R1 models, and obviously hopefully with the R2 models coming in the future, and even R3. Obviously, they're releasing R3 as well, which is kind of a very smaller vehicle, probably not so popular in the US, but that will probably come more towards Europe eventually. But yeah, I think the customer feedback that you consistently get with Rivian, I mean, you said it last week or week before, something like that. They've won awards multiple years in a row, in terms of
3 years in a row, yeah.
3 years in a row, according to their kind of vehicles and the kind of experience that they've had. Obviously, technology within the vehicles, people are very happy with them, very clean, very efficient. So yeah, that I think that speaks volumes when you're running any business, is the customer feedback. And yeah, that's one of the points I wanted to touch on there. And obviously, the second one was, in terms of my technical analysis, what I've got on my chart, which you obviously won't be able to see here. But I see the stock kind of getting actually towards 50, 60 next year. Probably not staying there, but I see it kind of going up to there for sure. In my own opinion, I know it's a bit crazy, but these things do happen, especially with these types of stocks. I mean, look at how far it's fallen just on the left side of the screen there. I know it's early 2022, but these moves can happen. So I think we can get to about 50, 60, and obviously come back down and maybe finish the year around 30, in my opinion personally. But we'll see how that kind of plays out for sure. But Vivian's one of my biggest positions in my portfolio, personally. It has been for a while. I know you're building up your position. I know you're very excited. But this is not, and we're not telling you to buy the stock. We're just giving our thoughts and feelings and perspectives on the stock at its current stage, and obviously anticipation for the year ahead. So just don't take any of this it's not financial advice essentially. It's just more of a guide. But yeah, this week I've got well, this year actually I've got Grab. Um, I won't talk too much about the kind of everything on the screen here, but I'll just kind of glaze over it slightly, and you can kind of go away and do your own research, etc. But the part that really appeals to me is obviously the chart as well, because this is the weekly chart. So key points, obviously it's large, engaged user base across multiple services, obviously mobility, rides, foods, payments. Me and you both have experienced it, real time. I've been in Grab rides and Grab mobility as well, and I think you've been there recently, haven't you?
Yeah,
Experiencing Grab.
yeah.
Q1 to Q3 2025 revenue up 18 to 22% year over year across all quarters, which is good to see. Growth is growth. And then tech, licensing, maps, and APIs gaining steam. And of course, the last one, growth in fintech and autonomous services. You might think that they might be doing too much. And I think that's fair, but if you're making the money, there's no reason why you can't just kind of branch off in different areas. If it doesn't work, you kind of pull back. It's all part of the innovation, all part of the growth of any company, basically. And we've seen it loads of times, obviously, before with kind of Google, Amazon, they've kind of branched off and done, Amazon phones, and I don't know what Google's done, but the Google glasses, I think they did once. They both failed. So these things happen. And the last point there is you can see analysts and investors expect Grab in 2026 to continue growing revenue and profitability driven by its super app ecosystem expansion across ride hailing, deliveries, and fintech, with improving EBITDA and there's no full stops in this sentence. EBITDA and strategic investments in autonomous mobility and financial services, posting the company for stronger earnings and market penetration. So yeah, that's that. There's no full stops in that. I should have grammar checked that before I read it. But turning over to the chart then, this is the exciting part. Obviously, we are kind of within the cloud, the moving average cloud, which is this grey thing moving through the screen there. Obviously, the bottom of the channel ish, thereabouts, maybe $5 might be around about bottom of the channel. But if you're looking for this long term, in terms of swing trading, maybe a long term swing trade, 6 to 9 months, it doesn't really matter in terms of entry as long as you've got a fairly good one with a sensible stop loss. Stop loss in my head, of course, is just below these two lows, which is around about 480, 475. And simple upside of 42% up to kind of the top of the channel. If you want to hold this for years, you're probably looking at kind of $10, $15 in a few years. But as a kind of 2026 swing trade, definitely just looking for this move for now. Last point before I hand it over to you here, Kate, and this is the volume profile here on the right side. Very nice at these levels between kind of 480 and 520. So if we can get a push out of kind of 520, 530, then there's no reason why this doesn't just, not fly, but consistently, hopefully, make its way towards the target around 750 for the year. What are your thoughts on this one, then, Kay?
Well, I think this is a very very interesting pick because I also have initiated a position in Grab for a while now, so I'm slowly building out the position for, and this time more with commons and synthetics with leaps, in and I think for folks who have only heard about it and they haven't experienced it, I think once, if you ever get a chance to visit the Southeast Asia region where they operate, you will see why folks are getting excited about it. Something like that does not exist in the United States. What I mean by that is the super app, right? So in China, you have WeChat, you have Meituan, you have some other services that, you just have one app and then everything is within that app. Whether you're buying tickets to train station, train tickets, bus tickets, flight tickets, whatever, shopping, everything is there. Similarly, now Grab is basically following the same pattern. And I think most recently when I was in Singapore, I needed a lot of stuff. You didn't even have to get out of the hotel. You just ordered food is normal, right? Food and taxi is a very normal thing. But then doing grocery shopping, you needed this and that. They just got it. And the beauty is, unlike in US where food delivery could take 30 minutes, could take 1 hour, sometimes take 1.5 hours for delivery, simple pizza. Over there that was pretty fast, right? You if you had like a 30-minute window, they will deliver within the 30-minute window. Not all stores, some of the stores. So I was very impressed with the performance of Grab app. Of course I didn't access all the features, but the features that, at least from a delivery and taxi standpoint, that was pretty impressive. And just simply the usage, which means that you were seeing a lot more Grab cars, the delivery guys on the road, which kind of showed very anecdotal experience that it is a very popular app. And if tourists from who are visiting are using Grab, it just goes to show that how popular that app is.
Yeah, I mean, back from the time when I went to Thailand, this was 2019 actually, so it's pre-COVID, and there was Grab was just everywhere, and we used it all the time just to get around the city. So, yeah, I mean, obviously there's going to be loads of different kind of experiences that people have had, some good, some bad, of course. But
Yeah,
I like
no.
to think that most of them would be good.
See, I think with any service, any product, any services, there will be glitches, and there were
Yeah,
glitches within the Grab app itself. That does not mean that the growth and revenue growth and the potential for the stock move is not there. It is there.
yeah. We'll see how that develops over the coming years. But obviously, for the trade that we have on the screen here, it's mainly just for 2026 to see how it does. So yeah, that's my second pick for 2026. The first one was last week, so you can go ahead and look at the due diligence we did for that one, which was Snapchat. This one is Grab, kind of snap and grab, snap
Mhm.
and grab like that. Anyway,
Grab.
we'll move on.
That's not bad actually. Snap and grab.
There you
Okay.
go. It's an easy way to remember my picks at the end of 2026 when I've inevitably forgotten. But yeah, we'll move on to your second pick of the year show. Okay.
Yeah, let's do it.
What have you got here presented for us today?
So the second pick for me for 2026 will be Monday.com. My first pick was Rivian, so you can always go back and see why we chose Rivian. For Monday, it's pretty straightforward. Monday has been on a decline from, I would say, since July of this year. We saw the first decline in February, then we saw a little bit of a ramp up, and then we saw another decline in July. And since then, we are in a downward trend. Now, from a thesis standpoint, I'll read these and I'll give you some of my examples as well. So, benefiting from expanding enterprise adoption and early AI monetization. But basically, what it means is you are seeing the number of customers are increasing from Monday.com, and they have this feature, the AI features, they are embedding different features within their existing product. So, you can now start to use those AI features by buying credits. And those credits are not that expensive from an enterprise spend standpoint. We are seeing the cash flow is improving, which, because the stock price has started going down and cash flow is free cash flow is increasing, which means that the stock is starting to get very, very attractive for institutional buyers as well. Now that's exactly what we're saying. So that's the thesis, that because the stock price has declined so much from the all-time high of $343, at that time the stock was looking overvalued from what it was bringing, but now the stock price is in 140 $145 or so. Suddenly the fair value for this stock is $184, which gives you an upside potential of 26%. So nothing crazy. All we are targeting is getting back to the fair value. And there are and you can see the yellow, that is the gap that we are actually targeting for it to climb back up. Now the issue over here is that this chart does not tell you to start to buy the stock right away, because this
Yeah,
is currently still in a downtrend, and the thesis will break if it drops below $122. Now, from a stock performance standpoint, we could still see weaknesses until we see the broader AI play getting better. Now, if you follow all these analysts, what they are saying is like the AI play has to broaden out, which means the second, third derivatives, not just the chips. Everybody's talking about the power, and when they talk about the software, most of the retail favorites as Palantir, then you'll have Snowflake, and then a lot of people are getting into the UiPath, but they are kind of missing this name, which actually is a pretty strong name in the SaaS space. And unlike UiPath, which I don't know, a lot of people, they understand how the software works. This is a typical project management software, but they're getting into the CRM function, which is a direct competition to Salesforce. They have a service function, which is a direct competition to ServiceNow. Now, those are enterprise level softwares. But then there is a small and medium sized businesses. That's where this particular software is targeting. So that is my goal, not goal, but this is my target, that we probably should see somewhere around the 185 to $200 price target by end of next year. So that gives you a good potential of 25 to 30% upside for 2026. That's pretty much it.
So in terms of downside, did you say 120?
Yeah,
Or
I think the thesis will start to invalidate, because we do want to see, because this is a base this is forming, right? So around the 184 is also the point of control where the majority of the volume is trading. Now if it continues to see a big decline, I would be very very careful if it starts to get towards the 120. I would wait and watch and see why, like what is the reason for this heavy selling. So even though I'm picking it this as my second pick, I will still be careful if it continues the trending downwards.
is this worth waiting for the next earnings report potentially or not?
I
Or
think
just have it on your watch list for now?
so. I already have a position, so I'm
Yeah.
actually going to dollar cost average. So for most folks, if you are looking into this name, I would carefully look at building this in tranches and not going all in one go, because this is going to be a risky name no matter what. This is
Mm.
much more riskier than Rivian.
Yeah, I mean, just the price action alone in this last year, you've gone from, well, actually, kind of,
343 to 145.
yeah, it's just crazy. So it's a very volatile stock. So that's,
Exactly.
be careful when you're sizing with this particular name. For me, your point on the wedge, the kind of descending wedge here we've got here, the point is, interest for me, should we say, is the break of that to the upside for sure. So I will just be having this on my watch list, which I've already written down there. Obviously with the wedge in the brackets, of course. But if you just wait until essentially to just kind of break to the upside, given time, then that to me is the optimal time to enter.
Yeah.
You can even have next 3 weeks of price action if we come back up to kind of 160. I think that probably is. Then even then, I'd be considering a potential position, because the downside is only down to kind of 145, and obviously your stop loss would be there, which is about 15%, which is not too bad for a long term swing trade. So yeah, definitely thoughts to be had. I think you're right in terms of entry. Maybe wait for a second, or at least if you're adding to long term positions, maybe wait until you see some good technical indicators hitting. But I think that
The first earning reports will
first
be,
earnings report would be really
yeah,
key for me. Yeah,
that will be the key,
for
because
sure.
that will tell us the entire 2026 outlook.